Monday. All right, Tim, how we doing? Bright and early. Let's get it started. How is the market this week?
Hey, Mitch, Dennis, Joel, good to see you guys. Well, we're going to find out, won't we? I hope that it would be like the snow in Steamboat Springs, where we've had 48 inches of snow in the last week.
That's nothing, Dennis. Tell him, Dennis.
Actually, 48 inches is quite a bit. We haven't had much snow. It's been mild here. Georgian Bay has been exceptionally mild. We did get about 4 or 5 inches when I was trying to drive yesterday morning, but I mean, It's been exceptionally mild here. So 48 inches sounds pretty insane to me, actually. Good for the slopes, though.
Oh, my goodness. Yeah.
Slopes up.
It's if you like powder skiing, we've had it. I'll tell you.
Oh, that's the good stuff.
My quads are tired from so that we've got this great encapsulation of what we've had out here in Steamboat. My last run yesterday is on this run called Ted's Ridge, Ted Liggety's Ridge, for the two-time Olympic medalist Ted Ligety. He's from Park City, but he's here periodically, and somehow that name got attached to this particular run. But I'm going down this run, and there are points at which, because it's not groomed, it's a challenging run. The snow that I'm going through is shoulder high. I mean, you're blowing through. It's like whipped cream, and just absolutely fabulous.
Wow.
And there's a market analogy.
Well, you got that cool whip, that's for sure.
Give us a market analogy. What's the market analogy here?
So that you have to make your turns, or you're going to get hurt. In what is occurring in the U.S. equity market, and I would say it's true elsewhere too. I mean, look at the DAX, the CAC. All of these markets have performed very well, but they're in particular ways. And I think that you have to make your turns if you're going to trade these markets profitably. They don't work the way that they did before passive money became the principal investment behavior. And it's very important for traders to understand that. If you expect the market to reward fundamentals, where is money likely to go if economic conditions contract or if we have a soft landing? Those things don't predict how the market's going to do. I was listening to Savita Subramaniam from B of A, who's a very smart quantitative analyst. But she said, coming into the beginning of January, people had piled into bonds and utilities. And you would look at that and you would not expect the U.S. market to go up in January. However, from a supply-demand perspective, you would. That's the difference, because you can't expect the behavior to tell you where the market is likely to go. So why did the market do so well in January? Well, it went where the supply was. That's the next thing. Make your turns. Traders, you have to make your turns just like you're on a ski slope, and you got to be quicker now. I'd love to tell you that the long buy and hold works. It just doesn't. I have those investments too, but it's not the stuff that makes money, believe it or not.
Not the stuff that makes a ton of money. That's
exactly.
For sure.
And so where was the supply coming into January? It was in tech. Tech is the largest part of the S&P 500 by far. If you add up, we've talked about this before, tech, consumer discretionary, communication services, half the market cap is tech. That's where the supply was. So the demand from passive money, which merely allocates resources to a product, this is very important, traders. For asset allocation managers like BlackRock, Vanguard, State Street, where 80% of their assets nearly are passively managed, stocks are a product, not a story. So they look for, where is there an affordable product to put stuff into? And it goes into tech, and tech zooms, and all of a sudden, what works? The momentum trade. I mean, you could look at Palantir. Palantir is currently a momentum trade. I made a colossal amount of money trading SHOP 3 different times in the last 2 weeks. I had my best trading week ever last week in dollar terms, in terms of total return. So that's what you have to take what the market gives, just like, by the way, the weather. You know, if the weather's going to give 48 inches of powder to Steamboat, go out and take advantage of it. if the stock market is going to give you a momentum trade, take advantage of it and make your turns. So that's how I think about it.
How often are you turning and switching? Like, I mean, in this market, because you're talking about making turns, and people will often turn too often. I turn too often for sure. How often are you turning? Like, are you turning like right when the sentiment and your indicators change? Will you do it like multiple times a week? Or are you talking like once every couple of weeks? How often are you making those turns, Tim?
In this kind of market, very much like skiing Ted's Ridge, I'm making a lot of turns. In fact, I was out of the market on Friday. You don't have to do this. I had a note from a user right before I came on air with you guys who said, I'm still in Splunk. Is it okay? Is the supply demand equation okay? We can have a look at that. Yes, it is. If you're like me and you think, because I always think about the calendar and the cadence of the market, what happens today? Index futures expire. It is used by the very same money that created the momentum trade. Well, I like to be in cash. So I did it on a gondola. I sold out of my positions as I was coming off the slope on Friday because I like to be prepared to take advantage of whatever dip forms in my momentum trades. If a stock moves 5% every day between intraday high and low, and demand is really strong and supply is diverged from that, and the stock goes down 2 or 3%, the probability that you can make money is very high. If you already hold it and it goes down 2 or 3%, then it has to recover those 2 or 3% to get you back to level. So, Dennis, I make the turns. If shop is up 2, 3, 4, 8, 10%, I'm going to take that. And then I could always come back in. Doesn't matter what price you pay for something. What matters is the price that you exit at. That's how I like to think about the market. And that is a reflection not of fundamentals. What is a multiple assigned to a stock? I don't think that that's a great way to understand when to make your turns. Because again, who's buying the equities more than everybody else? The money that it sees equities as a product, not as a story. That's how I think about it.
Now the question is, will it turn again?
Well, of course it will. Of course it will. The hardest part, Mitch, is how do you know when?
Yeah.
That's the existential
the $1 million question, they say. The $1 million question.
Timing. It's very difficult. I can share what edge users know.
Yeah, so let's see what the data says.
This is what edge users, and I do the very same thing. Look, I buy and sell the stuff that edge highlights. It's not me. I'll just use the math. I can't say, oh, this is my idea. It's just what comes out of the market. But I do exactly what it says. And so the first thing I do is look at broad market sentiment. Where is it on a 10-point scale? And when it's above 6, tends to be topped. It can take a long time. It could be days. It could be weeks. If you go back to November, we were above 6 for a very long time through October into November, but it was still true that the market. So then you have to be very tactical, make shorter turns because this is coming. And so what the green part of the graph is demand. It's merely an algorithm that says there are stocks and people who buy and sell them, and there will be imbalances that form, and that is measurable. And when the demand pushes above the 6.0, that red line, we know that sooner or later there's going to be a top for the market and prices are going to go down. When it drops below the green line, as it did right at the end of December, the probability that the market rises is nearly 100%. Well, it did that. Now we're back up here in the same range. There were options expirations last week, and the market topped right with it. It's going to, I believe, shallowly bottom again. But I think we're going to have another one of these. So then how do we know? Right? How do we know when supply and demand are working against us? Well, now go to step number 2. I like to look at my momentum portfolio. Edge does that. It's just math. There are 21 in it. That's a lot. If there are 5 in it, the momentum trade is over. The low volatility is where money goes when it's uncertain about what's going to come next. There are 11 in it. That's not a lot, but it's not 5 either. So oftentimes what I do is buy a low volatility stock like BSX or PM, which may go down when momentum goes up, but it reverses my hedge, and then trade momentum as long as this works. When this number suddenly drops, if tomorrow it drops to 15, you know the momentum trade is coming to an end. And third, just look at supply and demand across the whole market. This is demand, this is supply. Airlines and cruise ships, demand's coming down, supply is rising. What's the likelihood that you can continue to make money in United Airlines? Well, it's diminishing. Here's what I've lined up for Benzinga today. By the way, we can take a look at that. Communication services still doing well. Tech's doing well. It's well above 5. It hasn't tailed off. Supply is low. Again, it tells me there's still momentum opportunity. But that's what I'm going to look for. When all of those things turn over, then it's time to be very careful and make your turn. And really, the data is very effective from my perspective. Look, I've got a bias. I think that market structure is a very important thing to understand in some basic form if you're going to trade the U.S. equity market. But if you look at supply and demand, it will give you a predictive lead, not perfectly, but a very good one on what's going to happen next.
All right. Now, of course, there's some big boys reporting today. Let's maybe just take a this week. Let's take a look at maybe one of those big boys, see what it's saying right now. Okay. Maybe we could do Apple. I'm sure Apple's going to be one that a lot of people will be watching.
Exactly. No question about it. Here, I'm going to have to refresh here just a second. Yeah, and there are about 900 companies, wouldn't you know it, 900 companies that are reporting this week. We haven't had one of those in a long time. Sorry, folks.
Crazy amount of companies.
Yeah, 900.
And it's big names, Tim. I mean, like the Apples and the Amazons and the Googles and the Metas and the AMDs.
Right.
And Snapchat. Snap is going to report on Tuesday. And it's the craziest stock, but it moves the whole market because Snapchat then gets us a feel for Meta and Google, and then the whole market starts to move. So it's funny how much influence little Snapchat has on the entire market, and it's going to report Tuesday night.
And Snap has been a great momentum trade. There might be I'm going to do something here real quick, folks. Hang on.
No worries.
This could be so. We are Microsoft centric. This runs in Microsoft Azure and what's called Azure Blazor. There we go. And they've had trouble in the last week. So here's Apple supply and demand ahead of results. And Apple's been you can always do this, traders. Here's, if you see rising demand and insufficient supply, the bottom for supply in Apple was January 4th, right at the beginning of the year. There's big supply deficit, rising demand. Where's the price likely to go? Up. It's very simple. And then until that condition breaks down, you can stay in Apple, and Apple might report great results. But if I look at this is now the opposite of that. Supply deficit, supply excess. And there's demand still strong. But if I see this, I'm sitting out. It could continue to go up, but the mathematical probabilities are that any additional gains are likely to be small. And so that's what you want to look at before any stock that reports does so that you have an idea of what everybody else thinks. The beautiful thing about supply and demand is it reflects every known thing. It reflects what the hedge funds are doing. It reflects what the stock pickers are doing, reflects what the asset allocators are doing. It reflects what the people betting with derivatives are doing. All of that shows up here. Probably Apple has good results, but the likelihood that you produce additional gains is small. So take gains, not chances. That's what I always say.
Love it. Love it. And like always, all we're trying to do is just trying to find some probability, right? And it seems like the probability right now pointing to the downside. We'll see when the price action follows that probability, right? Doesn't have to be today.
Right. I don't expect bad things from that. I just think that any additional return is likely to be small. So you might as well find something else that'll produce a better return. And again, I will qualify anytime that you look at Palantir, recognize this is a risky trade because Palantir, the price is below $10. Mm-hmm. There is much greater standard deviation in prices below $10. And you have to know that going in. That it's going to move. Right now, Palantir is averaging 13% intraday volatility. That is, it could move 13% between high and low. So
where do you find that? Where are you seeing that number? Just on your system?
I will show you. Yeah. But so just look at this though. So demand came down a little bit, but it's plateaued. Look at the supply side, plunged off the cliff. Well, the probability that you can produce returns off of that is very high. Now the price might come down today, but if it comes down 6%, wow, what a great opportunity that is, because you could make 6% tomorrow. And it could be a 2-day trade. So Dennis, to see the volatility, we include this as a key metric in a portfolio view. So it's in the momentum portfolio. I'm going to go over here, look at that. This is key. I want to know what the liquidity and the volatility of any given stock is.
Yeah.
And we measure those. So here's Palantir, 9 bottom, just means it stopped falling at 9, for about 38% short. That's the supply side. That's very low. The broad market is about 49%. Here's price. There's that volatility figure. The 5-day average is almost 14%.
Wow,
it trades $3,300 at a time. So it's a pretty liquid stock, believe it or not. So that's the kind of, so if I see that stock down today, I'm buying it, because there's a very high probability that it will bounce again, and we can take those gains.
It's down this morning. It's down 14 cents at 2% Palantir. I have no position in Palantir, but we're giving you setups here. I don't mind it either, because this is the kind of dash for trash that this market is doing right now. And I mean, the chart had kind of tried to go on Friday. The market's pulling it back. I kind of look at this, I always take that approach. What was really hot yesterday, which would be Friday, and then if we're getting a significant pullback, the money gravitates to what was just hot. So, I often play my day trading that way, and this would fall into that category. So I like that Palantir is lining up with that too. I have no position in it right now, but that's an interesting setup there, Tim.
I don't own it either. I can, as I said, I will look at that today. But just look at, to your point, dash for trash. This is the momentum portfolio, and look at the names that are in it. Shop, by the way, continues. If I look at that from a supply demand perspective,
I believe Shop is upgraded today too.
That's one of our favorites. We don't have it, but that's one of our favorites for sure.
Well, and here's what you look for, traders. When these conditions change, that's when you quit. So look, so see the supply side, it continues to fall. And the demand side remains very strong. When this begins to fall and this begins to rise, leave. That will be your signal. And it's very effective. Same thing that happened back here. As demand came down and supply began to rise, that's when you want to be out, because you missed this whole deficit. That's hurting your performance. It's not having to own Shop, it's owning Shop at the right time. And that's the important thing to know in any stock in the market. There are only so many stocks. When demand rises, particularly when supply falls, that's where your gains are, because it didn't move until supply fell. Then wham, it took off. Well, you can see that and you can trade that.
All right, that's going to do it for us on, of course, you guys can check out this data, check out Market Structure Edge, get your free trial, don't even need a credit card. And of course, use that Benzinga promo code, right?
All caps Benzinga gets you like $40 off a month. This is not an inexpensive product, but it's a very good product. So
check it out, team. All right, like always, have a great one, Tim. Enjoy the fluff out there. Get that Cool Whip. You know it.
Okay, see you next week.